The insurance and the bond are required by the state, but the insurance and the bond are two completely different things. The insurance is required because, well, you're driving an automobile and there are state laws that are required about that, right? So you have to have liability and PIP, say, here in the state of Florida. That covers if someone gets hurt because you were driving the vehicle and it was your fault, and obviously the personal injury protection coverage the states require for owned vehicles. The bond is a completely different thing. Even though it's done by an insurance company, the bond is actually going to reimburse the state if you break certain rules or certain regulations that exist for auto dealerships in the state of Florida. So what ends up happening is if there was an issue with the title, or there was an issue with the lemon law where the state has to reimburse the consumer, the state then gets reimbursed by the bonding company. Now, different than the insurance, the bonding company is going to come after you in order to pay them back what they paid the state. So that has a lot to do with credit. That's why your credit, your other owner's credit, and their spouse's credit, all of that matters when you're getting the bond and affects the pricing. But the insurance, it's based on the number of drivers and their driving history. And so they're both done by insurance companies, but they're both very different.